If you owned any major software stock over the last few months, your portfolio took a hit, and there's a good chance you don't fully know why. Microsoft is down 31% from its highs. The biggest names in tech, ServiceNow, Salesforce, Oracle, are all down 20 to 30% this year. Analysts are calling it the SaaS apocalypse. And most of the coverage says the same thing. Anthropic did this. But that explanation is too simple. And if you stop there, you're going to make the wrong decision with your money. By the end of this video, you're going to understand what Anthropic Mythos actually is, why it spooked the market, and more importantly, whether the software stocks in your portfolio were sold off for a real reason or just caught in the panic. Let's start with what Anthropic actually announced. Anthropic is the AI safety company behind Claude. On April 7th, they dropped something called Mythos, a new internal model they say is so powerful they refuse to release it publicly. Their reason? They claim Mythos can automatically find what are called zero-day vulnerabilities. These are hidden flaws inside software that even the people who built it don't know exist. For hackers, they're the ultimate prize. No patch, no defense, just an open door. Anthropic said Mythos could find thousands of these across every major operating system and browser, some of them sitting undetected for over 20 years. And they compared the whole project to the Manhattan Project. Now, whenever a tech company reaches for a nuclear weapons analogy to describe their product, it's worth slowing down for a second. Because on the same week they made that announcement, Anthropic suffered a security breach. Unauthorized users got access to the Mythos preview model through a compromised third-party vendor. The company that just told the world it built the ultimate cybersecurity weapon couldn't protect its own most sensitive asset. Project Glasswing is Anthropic's controlled access program, a $100 million initiative, giving a handful of the world's most critical tech companies early access to Mythos, specifically for defensive cybersecurity work. Think Microsoft, Apple, Amazon, Google. The idea is to let these giants use Mythos to find and patch vulnerabilities before bad actors with similar AI can exploit them. It sounds responsible. It's also a masterclass in creating scarcity and mystique around a product nobody outside that circle can independently verify. That detail got buried. We're going to come back to it. The immediate market reaction was focused on cybersecurity stocks. Cloudflare down 12%, CrowdStrike down 8%. The logic was, if AI can find every vulnerability automatically, companies that charge to find and fix vulnerabilities are obsolete. That fear is probably overblown. The tests Mythos ran had their security defenses deliberately turned off, which is a bit like testing a lockpick on a door with no lock. But the cybersecurity sell-off got all the headlines. What got less attention is the deeper trade happening underneath. And that's the one that actually matters for most investors. Here's the real story. Anthropic's annual revenue run rate didn't just grow. It went from $9 billion to $30 billion in a matter of months. For context, it took most major SaaS companies a decade to hit $9 billion. Anthropic did 3 times that in 1 year. And the question the market started asking is uncomfortable. What exactly is Anthropic replacing? The answer, according to a lot of investors, is the entire middle layer of enterprise software. Here's what that means in plain language. For the last 20 years, big companies have paid enormous amounts of money for software that does specific jobs. Salesforce manages your customer relationships. ServiceNow automates your IT workflows. Workday runs your HR. Each one is its own platform, its own contract, its own annual fee. What Anthropic is starting to offer is something different. Instead of buying separate software for each job, a company buys access to an AI that can just do the job. No platform, no integration project, no annual license per seat. That's the disruption fear. Not that Anthropic hacks your browser, that Anthropic replaces the software you've been paying for every year. But here's what the panic is missing. That fear is showing up in stock prices long before it's showing up in actual earnings. ServiceNow, Salesforce, Oracle, they're all still posting growth. The disruption story is forward-looking, not present tense. And there's a twist nobody is talking about. Microsoft, the single biggest name in the sell-off, just officially joined Project Glasswing. The company the market sold because of Anthropic is now one of Anthropic's most important customers. That's not a disruption story. That's an adaptation story. Here's the honest truth. We don't know yet how much of this is real. Mythos might be exactly as powerful as Anthropic claims. The SaaS disruption might be coming. Or this might be the most expensive press release in tech history. A perfectly engineered story designed to raise a war chest before an IPO. What we do know is this. The companies being sold off are still growing. The tests were run with the defenses turned off, and the company that announced the ultimate cybersecurity weapon got breached the same week. The market sold the story. The fundamentals haven't changed yet, and that's exactly the point. Calm investors don't make decisions based on what might happen. They make decisions based on what the data actually shows. Right now, the data shows a lot of fear and very little evidence. In that gap between the story and the facts, that's where patient investors find their edge. The market will figure this out eventually. It always does. The question is whether you react before it does, or wait for the math to catch up with the narrative. If this deep dive helped you find clarity, hit like and subscribe. I'll see you in the next episode.